Stocks pulling back from all-time highs today as the S&P 500 posts its first loss in 9 sessions. Despite the drop, our next guest says there is one area of the market absolutely bursting with upside potential. Let's go off the charts with Stratega's head of technical and macro research, Chris Verone. Chris, what are you seeing in the charts?
Hey, Melissa, yeah, I think small caps are still really interesting here as we look forward to the end of 21 and into 22. Now, remember, Russell 2000 was up 140% off the March 2020 lows, and then it got stuck. And it got stuck for about 10 months. So if we bring up our first chart here, what we see is that range that Russell 2 has been in really for the better part of the year. It peaked in March, and we've been waiting for resolution. And you know what? We've got it. This has been a decisive breakout above 2375 for Russell 2. But most importantly for us, it's doing it with an expanding new high list. The percentage stocks making new highs within the Russell 2 hit something like 30% this week. Historically, when you get that big expansion in new highs, the forward returns, particularly over the next 3 and 6 months, tend to be better than what the historical averages are. So we like the move in small caps. We like that it's doing it with good breadth as well. If you go to our second chart, and I'll just show you here, this might be self-evident, but with small caps breaking out of this range, they are now starting to outperform large. I think this is a long time coming. They consolidated for much of the year, but this is about a 4 or 5 month relative high for Russell 2 versus S&P. And it really brings us to our third chart here, which is the idea that this is the sweet spot of the calendar for small versus large. If you look at it historically, really over the last 40 years, let's call it from November until about March is historically when you've seen the bulk of small cap leadership. Now, the question we want to ask ourselves is, within Russell 2, where are the best areas to find strength? And we'll start with the semis here and the resolution in the semiconductors, many of which corrected pretty meaningfully over the spring and summer, I think is a very important story. And I think from a macro perspective, the fact that you've seen all these small and mid-cap semiconductors break out here over the last several weeks is a hint, or is the market's hint, that maybe some of these supply chain issues are starting to ease. So we like that message from the semis. And then the financials here as well. Our last chart, this is the percent of financials within the Russell 2000 that are making new highs. Again, we've seen that data swell. So an expanding new high list for the Russell 2000 broadly, but we see it with semis, we see it with financials. I think the broader macro message here is it's hard to say the economy is slowing when you have small caps, financials, semiconductors, particularly down the cap scale, acting as well as they are.
Chris, it's Tim. Fascinating work. That was going to be my point. And so let's go to the mosaic ultimately that's being painted as it relates to also transports and industrials. And if you think about it, I've always seen the correlation between small cap and economic growth. And that's what you're describing here. Can you talk about also how this plays into two big sectors that at one point 6 weeks ago looked like they were rolling over as yields got a lot higher?
Yeah, Tim, great point. I mean, I think this improvement in the big cap industrials and the small cap industrials over the last several weeks is another arrow in the quiver of this story that economic growth is reaccelerating here. And we went through a pretty punky, 1 or 2 quarters where growth slowed. And whether it was supply chain induced or China induced, I think the message of the market right now, and that's what we care about. It's not my opinion, it's the market's opinion. And the opinion of the market here with small caps, industrials, semis, financials, discretionary getting better, I think is one of economic growth reaccelerating here. Look at some of these bellwether industrials. You mentioned GE before. Great chart. But look at Parker Hannifin. Look at ITW. This is a really compelling story.
The message of the markets, but not the message of the bond markets. And I understand a lot of where the 10-year yield has to do with positioning, Chris, but I'm wondering what you see in the charts here in terms of where it should be going.
Yeah, I think this low 140, kind of mid 135 neighborhood is going to be a big test for yields. Now, we did some work on this morning, and we shared with clients, I think, a very important revelation. We're 20 months off the March 2020 lows. That is not an unusual point for the curve to actually start to flatten. The curve doesn't steepen indefinitely. And we looked historically over the last really 40 years, it's about 17, 18, 19 months off of a market low where you actually tend to see the curve flat. Now, that doesn't mean recession. It just means that transition more from early cycle to mid-cycle. That's what I think we're in. Groups like industrials, semis, financials are more mid-cycle groups anyway.
All right, Chris, great to see you. Thank you.
Thank you.
Chris Verone of Strategas. All right, so interesting world we live in which the markets, the equity markets, can be telegraphing a strong economy, and the bond market is telegraphing, I don't know what it's telegraphing, a 1.43%, Guy.
Neither do I. And, you know, real yields in this country have never been lower. It's really a fascinating take. And I said a couple months ago, we played what's the most important chart you're looking at. And I said it was the Russell. I said you had this huge run up into February of this year, and then a subsequent sideways action in the IWM between 210 and 235. I actually thought it was going to break down, and here we are breaking through that 235 level. So it's clearly signifying something. And now the question is the broader market going to pick up on that in terms of the S&P 500 and ratchet to new all-time highs? That was my take a while ago. It's my take probably now. The IWM is a barometer for everything.